Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about investing in dividend stocks for weekly and monthly cash flow. Today is September 6th, 2017, and it is 9:30 p.m. Here we go. 9:30 p.m. Wednesday, September 6th. What are we doing? What's going on? What's happening? I heard today that that the Dow dropped 200 points. Well, good thing I don't invest in that. Anyway, let's jump on in. And that being said, let's jump on in and see what's going on. All right, here we go. Now we're holding positions into what do we call that one? CL, Colgate Palmolive, which is up. Hey, it's up 1,500 today. So let's see exactly what it did and how it's going to affect us. It's not really going to affect us at all because we sold that option against it. I believe we sold the 71 or the 71 and a half. Let's quickly take a look and see what our position is. All right, we sold the 71 and a half for 44 cents, and that's going to expire this Friday, which is 2 days away. So that looks promising considering we closed at 71 and a half. We're up to 53, so we have bought out. Ooh, that would be lovely. All right, I can deal with that. So we're taking a small bit of a loss on the stock price, selling it now. However, all the commissions we've made, all the premiums we've collected, and even the dividends we collected from the stock still puts us in a positive category. Let's quickly look at CL. CL's right here. Yeah. We're at the $3,800 loss. But get us out of this. That way we can jump back in and start making our profits again. Because right now, holding on to this, I don't know. I hate to tell you guys I want to take a loss just so I can collect profits on the premiums. Because I really don't like taking losses. It's a tough one to call. If I take it, yeah, we lose 3%. It's not a huge number, and considering we're collecting almost 1.5, sometimes even 2% per week, we can quickly make that back up because of lost opportunities. You know, because right now we're only bringing in anywhere between 0.5% and 1% over the last 2 or 3 weeks, because of holding on to the one position that we really don't want to hold on to. Not saying we don't want to hold on to it, it's just that, come on, how long can I hold on to it before it really starts affecting the bottom line? Today being the 6th, tomorrow is going to be the 7th, so what are we going to be looking at? We're going to be looking at companies doing dividends, doing EX dividend on the 21st, which there are none. Now we took a look at Love's yesterday, which was Las Vegas Sands. Look at Tiffany's the day before. STX, we looked at that one also. Best Buy and AVGO, we already looked at those this week. So we really don't know what's going on because we don't have anything to report today or tomorrow, you know, because there's really nothing there. So let's jump out of there and let's see who was on the list for today. Now, MOS, we did this one 2 weeks ago. So let's take a look at what MOS actually did 2 weeks ago from today, the 6th, the 30th, and that would have been the 23rd, August 23rd. Okay, so our entrance date, September, will be the 23rd. So let's go to look at MOS, M-O-S, the Mosaic Company. Okay, the Mosaic Company started out the year right on 29. Took them about a month to fall down to a trading level of 24, which they had traded for a month and a half, and slowly worked its way up to a high of the year of 34. After you hit 34, a slow downward spiral to a 28, which you traded there for a month and a half, dropped down to 27, traded there for about a month, dropped down again to 23, traded there for 3 months. Now she's at 19. This thing keeps going down, which is not a good thing. However, let's jump over to the 23rd and see if she actually makes her 15-cent move. The 23rd, which is right here. Okay, so we got 10 days from the 23rd. Because if it's paying out EX, if today was the EX date, 10 trading days ago, or 10 trading days in the past, would have been the 23rd. Okay, so she opened up at 1990. She had a high of 2031. So that's a 41-cent move to the upside. So, my friend, yes, she did hit the target the first day. She even hit the double dividend target within the first day. Okay. Had we done a spread trade on this one, we have to go back one day to take a look at that. Okay, she closed at 1990, so our spread trade would have been 1950. Okay, she had ended the week by 1950, which on Friday she ended the week at 2021. Okay, she ended that week at 2021, so the next week we would have gotten to the 1950 20. Yeah, the 1950. Yeah, so by the 1950, sell the 20. So she opens up on Monday at 20. What? Wait a minute, she's here, so we want. She closed at 20. Yeah, so we'll buy the 1950, sell the 20s, and she closed at 2011. So yep, would have made it there also. That's a good thing. Okay, so this week we wouldn't have bought it because you're coming right into the dividend, and you never know what's going to happen right after the dividend pay, right after she goes EX. So most likely, she's payable on the 21st, which is next week. No, which is in 2 weeks. Okay. Who are we looking at for tomorrow? YMBC, GME, GM, Coach, CME, CBS, ATM, ADP. Okay, so these ones you would have to gotten out today and tomorrow, so those would be the 24th, wouldn't they? Yep. Jump in on the 24th. August 24th. So let's take a look at some of those. ADP. ADP starts the year off trading right on 87, goes sideways for about 2 months, slowly takes about a month and a half to work its way up to 102, where she trades about a month and a half, drops back down to 95, then back up to 100, 103, she trades that range for another 3 months, drops down to 96, 97, back up to the 101 area, trades for another 2 or 3 months, spikes up on some kind of good news or something to the 121, which was the high of the year, drops back down and comes back to the 103, 104 area, which is where she kind of is at the moment. Now, we said we wanted to get in on the 23rd to take advantage of ADP. They're only paying out at 27 cents. The 23rd is right here. All right, she opens up at 103.43, and 103.92 is the high, which doesn't make the dividend investing goal, because what you want to do is when you're doing the dividend investing, trying to capture the value of the dividend, not the dividend itself, but the value of the dividend. You see the dividend right here is 57 cents. Okay, so 10 days prior to the EX date, which is the EX date is the 7th, which we've already discussed is always going back to the 24th. Okay, so you get in on the opening on the 24th. Okay. You add the value of the, you get at the opening of the 24th, which is right here, open at 103.60. You add the 57 cents to that opening price, and that would have given you 103.95. Okay, so 103.95, you would have been off the first day for the equivalents. And had you done the had you used the stop loss, the trailing stop loss, the trailing stop loss would allow you to capture more than just the dividend itself. So when the pullback comes, you're not totally affected by it, and you just go back a little bit. the way that a trailing stop works is basically you reach your target price. That's what your target price is, okay? But that's not where you sell it at. You sell it as you'd be using the target price as a trigger, not as an exit. Now, what do I mean by a trigger is, as soon as it hits your target price, if the stop, that would trigger a trailing stop loss. So if it drops back down below your trailing stop, okay, then you'll be called out. However, if it goes down just a little bit and goes back up, what happens is your trailing stop moves up along with it. But it keeps that certain gap between the stop loss trigger and the actual exit price. Okay, so when the stop loss is triggered, and then it's funny, I had it right on the top of my head. The trailing stop loss. Okay, that's funny. Ugh. Okay, so when you buy it at the opening of the day is what it is. And here you can see right here what's the O, that will be the number. The opening price of the day on this day in particular, which was the 24th of August, it opened up at 103.60. And there's no arguing with that. I mean, fact is a fact. It is what it is. Okay, so you take the ADP's dividend amount, which is 57. Okay, you add it to the opening of the day. See, the opening price is right here. And here's the date for the 24th for this stock. And the opening price is 103.60. You add the 57 cents to it, and it comes up to what's that? 104.13. Right? Is that right? 104.13. No, it's not. Okay, goes to 7, be there, 6 of them, 11, 104, 17. Okay, so whatever it is, 104.17 is your new target, your new exit price, okay? That is where you want to set your stop loss. You want to trigger your trailing stop loss. Okay, so you put the order in the night before. You buy at the market at the open, and this day it just so happened to be 103.60. Then the trigger trade would automatically set a sell point at 104.17. So as soon as the stock price hits 104.17, it triggers the trailing stop loss. So if it drops down below a certain point, now that's a decision you're going to have to make. How much wiggle room do you want to give the stock? Okay, the software that we came up with gives you an average movement per day of the percentage-wise of the stock price. But it's a bunch of math you got to figure out. Okay, my suggestion would be, this is just, a rough estimate. With a dividend of 57, you want to give it enough wiggle room of like 30% of the dividend price. So it's almost a 60-cent dividend. So you want to give it at least an 18 cents, 19 cents, maybe even 20 cents movement. So if the stock goes up, the stop loss goes up in increments equal to the stock price. But on the way back down, once it hits 1/3 of that space of the spread, you're called out. Okay, that way you're preserving some profit. And if the stock just keeps on going up, then your exit point will never get reached, but the price value keeps on going up, up, and up until it comes that drawback down far enough for your exit to be executed. So then you'd be out of that trade. Okay, so that was ADP. That one worked out well. Even the spread trade we had gotten in on that day, I mean, look, she's up. The next week, she's up again. So both of them are good there. So almost any trade any strategy you use, or I should say any one of our strategies that you'd use, you would have been profitable with this stock had you gone in 10 days prior to the EX date, like we tell you to. Okay? Just letting you know, it doesn't work for every stock, but it just so happened to work well for this one. It worked well for ADP also. Let's see CBS. CBS. Now, our trading strategies aren't huge for, if you're thinking it's a get rich quick scenario, no, that's definitely not it. That's if you're looking for get rich quick, if you're looking for huge gains, you best look elsewhere. This is basically 10, 15 minutes a day, looking for that 1 or 2% per week. 1 or 2% per week comes to a very, very nice chunk of change at the end of the year. If you need 1 or 2% a week to live off of, hey, great. You got 100 grand put away, 1% of 100 grand, $1,000 a week. I can live on $1,000 a week for just 10 minutes a day. That stuff is easy. However, for those of you, along with me, who don't have $100,000 to play with and live off the interest, we have to continue working. So CBS starts the year off right around 51, 52, finds a low of the year a week later at 48.96, and then from there it takes a couple of months. Actually, it takes about 6 months for it to get up to the high of the year of 70. She goes from 48 up to 70 with a little bit of a tracement, back to 60, back up to 66, and then she's settling right down here in the 62 area. Now this one, CBS, looking for 18 cents, and this again would have been on the 24th, which is right here. All right, she opens up at 64.90. She hits a high of 65.10. Okay, now almost anyone can see 65.90 to 65.10 is 20 cents. It's a 20-cent move. So yes, it hit its dividend investment target of the 18 cents. It hit that the very first day. Would it hit the double dividends? Not that week. Would it hit dividend capturing? I honestly don't know until tomorrow, until Friday, because it's supposed to be paying out its EX date tomorrow. Okay, which means, excuse me. I'm gonna have to stop doing this in the morning, because anytime the sun goes down and I'm on live broadcasting, I always yawn, and I don't know what that is. I think it's psychosomatic. It's just something that just happens. All right, back on track. All right, CBS. How we did the dividend investing? Yeah, that would have worked. Dividend capturing, we don't know until sometime mid next week. Okay, double dividends did make it. Options. Okay, had we done options on the 24th, we would have looked at closing as 63.50. So anything over 63.50 would have been profitable. And yes, she's over 63.50. So had we done a spread on this one, yeah, that would have worked. How much would it have given us? I honestly couldn't tell you, because that was last week. Oh, wait a minute, that was 2 weeks ago. Yeah, because she's going EX tomorrow. Okay, CBS dividend. Wow. Okay, it's going EX tomorrow, but date of record is going Friday. Hey, that's pretty cool. It's only 1 day hold period on that one. All right, so tomorrow is the EX date. So we would had to have gotten out today to beat that price from the 24th, which is down here. Opened up at 64.13. To get out of that, CBS 18. Yep, that one made that one. CME is the next one. CME. CME starts out at 107. Does that for a couple of weeks. Drops down to 104, 105 for about a month. Finds the low of the year at 99. From there, from 99, she shoots up pretty darn quick to the trading range of 116. That's a 20% jump in just 3 days. That's cool. Okay, she trades there for about a couple of weeks. Jumps out and tests the waters at that 123. Didn't like it very much, so comes back down to the 115 area. Trades there for about a month or so. tries that 120 area again for a couple of months, doesn't like it, back down to the 117 for 3 or 4 months. This is 3 times the charm. Here we go. Let's go for the 124, 125 area, which they do that for a month, a little about 5 weeks. Doesn't make it, but the lower highs, no, the higher lows. Okay, the higher lows. All right, so you got a low here. Okay, 99. Okay, here's another low here, 112. That's higher than this one. Look at this low here, 115. That's higher than the 112. Okay, 116 is higher than the 115 up here, 116 and a half. Not much higher, but it's still higher. Okay, and then this low right here, 119, so a bit higher. And then here, I'm not quite so sure if I would jump in this one again, because CME going EX tomorrow. However, 10 days ago, the 24th, would have been right there. Okay, the CME was 66 cents. She opened up at 126.07. She hit a high of 126.62, which is a 55-cent increase. So no, it didn't hit its target the first day. Second day definitely hit the target. Third day, if you had yourself a trailing stop loss, you would have had a nice little profit there rather than just the dividend of 66. But that was Monday, so it carried through on Monday. And had you done the spread here, you would have made it, you know, the spread traded on the 24th. I don't think it would have given you very much because that's just one day. And then you have Monday here, where she opens up and then she just sinks down a little lower. But hey, lo and behold, one day before EX is tomorrow, this baby opens up at 125.83 and closes at 125, 128.42, which is a nice number to close at. That's lovely. So definitely keep your eye on that one for tomorrow, because tomorrow is Thursday. So we have 2 days left for CME. Now, I wouldn't jump in CME anytime soon because they're at an all-time high, or high for the year anyway. So we don't know what they're going to do tomorrow. Like I said, I don't like investing in companies that are at a high for the year because it's going into territory that hasn't been this year or the last 52 weeks. Okay, so tomorrow we can look at these guys: FDX, KSU, MGM, and OXY. All right, let's see if we have any questions. Oh. No questions. All right. You guys got to come up with a little bit more questions in this live interaction stuff, because without any questions, how am I supposed to answer it? Okay, so that being said, CME looked good. So tomorrow, what are we looking for? So tomorrow's the 7th. We get one more week for these guys. QCOM, we did that one last week. We got one more week for that one. That could work. Some of these guys, Home Depot, that's always a good one to get into. We'll take a look at that one. All right, we looked at that one last week, so you have another week to do that one. So what does Home Depot offer? Home Depot. Okay, Home Depot starts out 134. Can't cut it. 134 drops down to 127. Does that for about 6 weeks. After that, she hits a low of 119 and stays there for a while. Teeters back at the 127 area for about another month. Jumps on up to the 136 for about a month and a half. Jumps on up to the 147 for about 2 months. Jumps on up to 156. Trades for about 5 months, and she's still here in that tight little range. Now, you see a couple of good days yesterday and today, which doesn't look very favorable tomorrow because you got gaps here, and where there are gaps, there's usually always a pullback. May not be right away, but there will be one eventually. Can it sustain it and continue to go up for the rest of the week? I really don't know. Monday, Tuesday, Wednesday, 3 up days in a row. That looks lovely. What does she normally do this time of year? Quickly look at the seasonality. Oops, where is it? Right there. Oh, this is nothing but up all year round from first couple of weeks or first couple of months, like sideways, up a little bit, sideways with a slight upward growth. Towards the end of the second quarter, she lays flat. Third quarter is nice up growth. End of the third quarter goes flat, and in the fourth quarter it's nice and upward. So here we are right now at Home Depot, and we're looking at flatness. So would I get in this one for the last couple of days of this week? I'm going to say no, because a couple of down days coming up. But what does Home Depot offer for the next 2 days? 156. That's the only one available right there, 152 to 155. Okay. That looks like 15%, between 12 and 15 for 2 days. That's not that bad, but you'd have to stay above 155, which could be doable. You never know. You go up further, it's not really worth anything. They wasn't worth a penny. That was worth a buck, and what's worth a buck not even worth looking at. Credit, dollar credit, 208 credit, 245, 249. It's 5 cents. This one right here, 32. I don't know if that's gonna be worth it or not. It's not a lot of money for a small spread, as long as she stays above 155. Make money on that one. Yeah, see, the funny thing is, credit spread, as long as she stays above 155, you make 32 cents of. Here, we make 25 cents if she stays about 155. So what's the margin requirement? Margin requirement here is 2,600. So that's around 15%. And if I do this one here, max profit is 320, which is over 100. Oh, no. Which is about 15%, because I still have to put up 2,100 bucks. Nope, that's over 15%. So they're both giving me about the same, about 15%. That's not good. Anyway, that being said, do a credit spread, the 52, 55. 52, 55, get the credit spread. That's worth, like I said, around 30%. 20%. Was that? I'm not quite sure. Yeah, that's 15%. Okay, credit spread, debit spread, 10%. Okay, so you get 10% for doing the debit spread, which is you buy this position here, the 152.50 and the 155. Okay, you buy that one by the call, or the debit credit spread, the put credit spread at 32 cents comes in around 15% return, because you're only going to make $300 and you have to put up 2,100. It's a heck of a lot more than 10%. 10% is only 210. So it's about 15. But definitely better off doing the credit spread rather than doing the debit spread. Anyway, that being said, I got no questions. So this is Mr. James, and we are going to be out of here. Dividend Stock Talk for investing in dividend stocks for weekly and monthly cash flow. Our goal is to get between 0.5% to 2% per week. That's our goal. Can we do it? Most of the times we do. Every once in a while we don't. If you're looking for get rich quick, you come to the wrong place. This is safe investing using dividend stocks and a nifty little calculator I came up with. Anyway, I'm going to sign out for now. I'll catch your questions tomorrow, it all being Thursday, and we shall catch you tomorrow. So this is James signing out from Dividend Stock Talk. You guys have a great day.